Can you make trading work for you being a part-time trader? Well, the answer is yes. Most people start off being a part-time trader. I've been there, I've done that. I've seen countless of traders doing it and starting off as a part-time trader and slowly graduating into a professional full-time trader. So yes, it's definitely possible. And I'm gonna show you how you can pull off trades like this and like this being a part-time trader. So let's jump into the video. When it comes to part-time trading, the most important hurdle that you're gonna be tackling with is how much time are you able to commit to your trading and how much frequent are you able to commit within that timeline. So there's two options that we generally encourage. Option number one, throughout your day, doesn't matter if you're working a 9 to 5, you're checking the markets every single hour. It doesn't have to be long, you're just checking every single hour on top of the hour. That's to make sure that you're always staying on top, and if there's anything setting up, you are able to get in. The second option is just putting aside 2 to 3 hours a day to look for opportunities in the market. So let's have a look at the charts. I'm gonna break down the strategy that you can choose to use depending on which of those two options you wanna apply your trading with. Let's have a look. So the strategy that we're gonna be using is called trend pullback. Okay, that's what we're really big on in Urban Forex. What it basically means is we're following the trend, we're looking for a pullback, and we're joining the trend. As simple as that. Okay, so let's have a look at this example on dollar yen. Now, on dollar yen, we clearly have an uptrend, right? We can see the higher highs, the higher lows, the higher highs going up, and we see a very strong breach to the upper side. Okay, in order for us to look for a good trend pullback trade, there's generally two things you want to focus on. The first one being a strong breach. This one right here. Okay, when I say breach, it means a breach beyond the previous high. If we're in a downtrend, we want to see a strong breach beyond the previous low. Okay, so first things first, we look for a strong breach. Second thing, we look for a pullback. And when the pullback actually comes, we want to make sure that it comes roundabout into an SNR. So we do have a support equals resistance area here, but the more important thing to focus on is how are we coming down into that area. Okay, if it comes down crashing down like this, these are not trend pullback trades that we generally take at Urban Forex. What I really want you to focus on is the way that it comes down, it needs to slow down. Okay, so here's how we generally read it. So let's play pretend for a while. Okay, let's say the sell that's coming down, we call them the store or the store owner, whatever. In this store, they are offering a product. Let's just say, or apples. Okay, and then we have customers looking for apples. And the customers, their sole goal here is to look for a good discount. Okay, and for the store owner, their goal is to get customers to come in at a good price. Obviously, the store owner do not want to offer 100% discount. They want to offer a discount that's good enough to show that the buyers are interested and then let the buyers continue to buy up all the apples and in this case, resuming the trend. Okay, let me go over the example here so this would make more sense. Or let's say we have a couple of apples you like. Store owner is offering to sell the apples at this price. At this price, we see buyers getting slightly interested to the buy side. They're buying a little bit of apples, but nothing really major, right? We see the same thing happening here. We see buyers coming up again, but again, nothing major. So what happens next? The store owner really wants to sell their apple. So logically, they would offer more discount. So more discount actually comes in. And then again, you would have the customers buying the apples, but again, not a lot compared to how much discount that was given, right? So this whole process, it continues to happen, inching a little bit lower every single time. But notice every time the store owner offers slightly more discount than the previous discount that was given here, buyers are now getting stronger, getting more interested. So here, store owners offering discount for people to buy the apple. A lot of demand coming in. People are liking the apples. Slightly lower just to test and see if people are liking the discount. Every time we go slightly lower, buyers just continue to consume the discount. Again, here, buyers got really interested. And finally, we are able to see a break of this trend line. Okay, and where is everything happening here? They're all happening at this support equals resistance area. So that's a very quick breakdown on how we read pullback. In the MPA 2.0, we have a full-blown section about this. I'm just going over a very small detail on how to read it. Okay, now coming back to this, as soon as you see buyers getting a lot more interested and going higher than what initially the store owner were offering the discount from, that's where you want to start preparing the buys. As soon as you see things start to hold here, it's essentially telling you, okay, you know, one buyer came in, two buyer came in, the entire village came in, and then every time the store owner is offering a little bit of discount, buyers are holding, right? Buyers are buying. Whatever apple that's selling, buyers are buying. These are areas essentially where you look for the buys. So in a very basic format, the buy would happen like this. You will put on your buy position here, the stop loss below, and then you're going to be taking it up to the recent high. Here we can see a very quick 1-hour profit. Okay, now I want to show you an example for the sell side. Okay, for the sell side, it's the same thing. First things first, you want to look for a strong move down. Here we can see we are overall in a downtrend and we have a breach towards the downside, breaching this area, breaching this area. And do we have a support and resistance area to work with? Yeah, we do, right? So this right here is the SNR that we are looking at, and look at the way that the pullback is coming in, right? So again, I'm gonna use a different analogy here just so you can see, you know, what fits better with you. But basically what I'm gonna do next is just fading the momentum, right? So look at this first move going up as a pullback. Is it strong? Look at the next move coming down. Is it strong? Yeah, it's strong, but compare this move to this move. Overall, who's stronger? Buyers still look stronger, right? Because this move here is almost just 50% of this move going up. Okay, fine. That just means your sells are not ready to go yet. So let's look at the next move. Next move going up. Going up, sellers coming back down. Who's stronger here? Obviously, the buyers are still strong, right? The next move going up. Now, look at what's happening. Every time the buys continue to move up, it was very strong before, got a little bit weaker compared to the first move, just based on how far it traveled. This is slightly smaller in terms of the distance. Here, it got a lot smaller in terms of the distance. All of this, again, happening at your support equals resistance area. So things are really getting interesting here. However, the sell is still not ready. You will only see the sell being ready when the sellers are stronger than the buyers. So here, we have a pullback, buyers buying again. Now this time, we are barely making any higher highs, okay? You really want to feel the pulse of the market here, right? From this stage, we see a strong rejection to the downside. At this point right here, that's where you can say, all right, my sellers are back, the pullback is done, it's time to get in. As soon as you see price starts to hold like this, after this full-blown rejection telling you that the momentum has shifted to the sell side, that's where you can look for your entry. So a trade like this will generally set up as so. getting in at areas like this. Once you see the rejection from the buy side, there's no more buyer's action here. Every time there's a buy going up, sellers are hitting it back down. You will put your stop loss at the highs, taking this down to the recent low. And as opposed to the previous trade, this would be almost a 2R rather than a 1R. So that's essentially what a trend pullback trade is. Okay, you're trading a trend, you're looking for a pullback, you're fading the momentum, looking at how strong or how weak the pullback is, and depending on how things go, you join the trend. Okay, so back to the main topic. How do you use this with a full-time job? Now, if you notice here, I'm looking at this on the 1 hour, right? The first option, which you remember we spoke about earlier, is you're just checking the charts every single hour. So in this case, what you're essentially doing throughout the day is my sellers getting stronger than my buyers? No. Has this happened yet? No. So you're just checking every single hour just to see if things have really turned around. Most of the time, things are not just going to turn around and go within 1 hour. Things would take time to set up, because if you look at this bar right here, it took 1 hour to come down. It took a couple more hours just to hover around before going. So when I say checking the market at least once every hour, perhaps in a 2-hour interval, just checking the markets and see where things are going. So this type of approach gives you the time to stay on top of the market despite having a full-time job. You don't necessarily need to sit and look at the markets for 2 to 3 hours at one go, right? You can just stay on top of the market throughout the day and see when things does really set up, you just look for your entry and then you just hold on to the trade until the recent low or the recent high. All right, second option. You do not want to look at the markets throughout the day. You just want to focus on 2 to 3 hours in one day and then looking for opportunities in those 2 to 3 hours. There is another option for this, and for that, we need to use a different time frame, okay? Because for this to set up like this, it takes a couple of hours, right? Obviously, it took from 6 a.m. from one day to 9 p.m. So that's more than 12 hours for things to set up. If you want to do things quicker and you want to only spend 2 to 3 hours per day, I suggest you looking at the lower time frame. This is something we call at Urban Forex the cheese trade. So same approach, nothing really has changed, but let's look at a lower time frame. Here I have the US dollar CAD. Okay, again, everything is the same. We look for a strong breach, which we have here, and then we look for a pullback. And in this case, we see the pullback coming into an SNR. We see things coming down strong initially. We have buyers coming in, store owner offering discounts again, slight little buyers, store owner offering discount a little bit more, but this time the buyers got really interested in the banana, right? And then things really went up. So buyers really liked the discount that was given here, and buyers are really coming into the market. So like what we were looking at previously from those other two pairs, we see things are holding here again, showing signs that whoever bought the banana there, they called the entire village, the entire family to come in and to just get in on the buys looking to buy more banana. Every time the store owner is testing the market, offering a little bit more discount, buyers are buying, right? Again, it's at this point where things really tell you that we are going to resume with the trend. So same approach, you will look for your buys around about these areas here, going for the recent high, and this is a very quick 1 hour trade that you will be able to see. So let me play this forward. There we go. Okay, now obviously there is ways to hold on to this trade longer to make more out of this, but that's not the point of this video. What I'm trying to tell you is you can take the same approach, but using it on the lower time frame. However, there is one thing that you want to take into account when you're trading the lower time frame. The lower time frame is really driven by activity in the market. Okay, and activity, they only come when the sessions are open. When I say session, I mean trading session. It could be the Asia session where Sydney market is open. It could be the London session where the London market is open, or it could be the New York market, right? So what I really suggest you doing is making sure that when you're looking for trades like this, you are in an active market. You don't want to be trading when the New York market is about to close. That's where things can really go wrong because things are not going to move. One thing that can really help you to stay on top of the market session is just using Market Countdown, right? This is a free app that I personally use. They have a 1-year free trial. It tells you exactly when the market is open, when the market is closed. That way you can stay on top of the market and make sure that when you're trading, you're not trading in a market where it's not active at all. Link in the description, just check it out if you like it. I personally love it because I've used it for quite some time now, actually. But if we come back to this, let's see exactly what time is this, right? When we have this breach here, right? This is at 10 p.m. my time, which is actually 30 minutes after the New York Stock Exchange open. So that's a time where the markets are usually active. And these are times where you want to be on a trade. Okay, let's have a look at another example, Euro USD. Here as an example, we have a breach to the upside, strong uptrend. We have the pullback coming in. And as you can see here, if I use the analogy of fading the momentum, looking at how much slowdown has happened. Initially, this was strong. We have some reaction. The pullback still continues to come in, but look at how weak this pullback is compared to the first time. Right? A lot weaker, right? And then what happens next? The buyers just completely reverse the entire move. So once that happens, again, that's telling you the market is screaming at you, telling you things are going to resume. As soon as you see things start to hold here, that's where you want to start thinking of the buys. Okay? One more thing to make sure that you are staying on top of is making sure that you are in an active market session. Here I have 4 p.m. around 4:20 p.m. my time, which actually translates to London Open, right? London opens at 4 p.m. my time. That's where things really start to move. So if we're looking at this as a simple way to get in, you would just be looking for the market to hold. And if it's not going anywhere, as you can see here, things are really holding at this area. You would just get in with an entry around there, stops below, taking it up to the recent high. And this would offer you a 1.25R profit if we reach target. And there we go. So those are the two main ways you can really use to approach trading part-time. And yes, personally, I like the second option a lot more because I get to really hone in and focus for those 2 to 3 hours every single day. Now, we dive much deeper into these concepts in the Mastering Price section 2.0 at urbanforex.com. If you want to look more into this, make sure to click on the link in the description below to check out the courses. Otherwise, hit the like button. Make sure to hit the subscribe button if you're not already subscribed. Turn on the notification bell, and I'll see you on the next one. Bye for now.